So what I'm going to talk about today, we're going to talk about options, but we're going to talk about them in the context of how they can help us with stock trading and not about actually trading options. I think we need, because you can get caught up in the weeds with this stuff. I certainly did when I was putting these slides together, and I had to crawl back out. So I keep it very high level, try to keep it as simple as possible. And if you guys have any questions along the way, just ask so we can address them. I want this to be more interactive if possible. So anyway, okay, so the objective is, again, how options can help us with stock trading. And so I came up with a few definitions that you may want to refer to time again, just to keep it straight. But an option is a derivative of a stock. And an option is called a derivative because it derives its value from that stock. Okay, and so there are two types of options, calls and puts, and the definitions are here. A call gives a buyer the right, but no obligation to buy a stock at a strike price. And investors will buy calls when they believe the stock price will rise, and they will sell calls when they believe it will fall. Puts gives a buyer the right, but not the obligation to sell a stock at a strike price. And investors buy puts when they believe the price of the stock will decrease, and they'll sell the puts if they believe it will increase. So that's kind of an interesting twist there. But the option chain. Okay, this is a table of available options for a particular stock. Option chain shows all listed calls and puts within a specific maturity date. So options do degrade over time, and so their value from day to day goes down. So it's completely different than trading stocks. And so that's what this means. And so we have weekly chains. So it's just a week's worth before those options in that chain expire. No, they have no more value. And then we have monthly option chains. The strike price is the price at which a put or a call option can be bought or sold. And then a contract is equal to 100 shares of the stock. So if you buy one call that is equal to 100 shares, let's say I'm buying a call of plug, I would be buying 100 shares of the stock. That's how that works. Okay, so who are the options players? Okay, we have retail traders, they're people like you and me, and the trading is basically speculative. You're betting on whether the price will go up or down. So if you think it's going to go up, you buy a call. If you think it's going to go down, you buy a put. It's essentially how that works. Institutional traders are large entities like mutual funds and hedge funds. They use options to offset potential loss. So they can buy a bunch of stocks, and then they'll buy some puts to protect the loss if the stock starts to go down. So it offsets the loss. They are also speculative, betting on whether the price will go up or down. Options traders are predominantly institutions. We have some retail traders, but they don't really swing the market at all in that particular area. And so this is why we're looking at options to help us with stock trading, because the whole objective, or mine, is to follow the institution, see what they're doing, so it gives us an edge. And for whether a stock, following the stock progress. Okay, retail traders, like I said, they represent a small percent of the options traders. And again, the large players are the institutions. Okay, so this is where we start to leverage. to help us with stock trading. Open interest and volume. Okay, those are key metrics that describe the liquidity and activity of options. And we can use these to identify prices that traders are most interested in. And I will show you this on Thinkorswim, so you can see a visual. Okay, so the open interest is the total number of bought or sold contracts that haven't been settled. So there are contracts that people have bought or have sold. In the case if they sold calls or they sold puts, it's all part of that open interest number because they haven't closed that trade yet. So that's what these are, open trades, open interest, open trades. The open interest can increase with new long positions from buyers or new short positions from sellers. So it doesn't matter. It will add to the number of the open interest. The open interest is cumulative over the life of an option chain for each strike price. Okay, so then the option volume is the number of trades that are completed each day. And so it's important to look at the volume because it tells you where the interest is. These traders, like, and I will show you this, it measures the strength and interest at a particular strike price. And the volume represents the number of option contracts bought and sold. So the other metric indicator we're really going to be focused on is called the put-call ratio. Okay, so this is calculated based on options trading with our options volume or open interest. And so this is designed to help traders gauge the market sentiment and help us to identify probable price moves of the options stock, underlying stock. And this is a calculation. It's very simple. You take the total puts at a particular price and divide it by the total calls at that particular price. And you can do this. This formula can be for open interest, and it can also be for volume. Okay, so here's an example. Let's say we look at a stock like plug, and we look at the strike price 27. Okay, the call volume at price 27 is 1502. The put volume is 330. So we divide 330 by 1502 and it's 0.212. And so what does this mean? It means that this stock is viewed very bullish. It's there's a lot of interest in the stock at this particular price. And so if you have a PCR that is greater than 1, then that suggests more of a bearish view. And you could expect that the price will go down, and you'll see that on the chart. If the PCR is 1, that's more of a neutral view, and you might see then the price action in a consolidated zone on your price chart. Okay, so these are different scenarios that you could use using the PCR open interest. So for instance, if the price on the chart, on your price chart is rising and during an uptrend and the open interest is increasing, this can lead to a bullish sign for continued price climb. If the prices are rising and the OI is decreasing, this could be considered bearish. And falling prices in a downtrend with the open interest on the rise, this may indicate an increase in shorting activity. And this is where you could use, refer to the shorting analysis tool for confirmation. You have falling prices in a downtrend while the OI is declining. This can mean that traders are closing their positions, but it can also mean that the stock price starts soon, and we could potentially see a reversal to the upside. And then of course, if you have a sharp drop in price and the open interest is high, that can be a bearish sign and that could lead to panic selling. So these are scenarios that are actually pretty useful. So again, referencing this slide, if you choose to use this as part of your strategy. So what does it mean when we see these using both the PCR open interest and the PCR volume? Okay, so if the open interest is falling and the volume is rising, that can mean that there's less interest on the put side, which means that there's more positive outlook on the stock. And the rising volume may mean that the traders are then hedging and they're protecting their long stock trades from a reversal to the downside. So if you have the open interest rising and the volume falling, traders could be bearish on the stock, or the stock could be consolidating and there's minimal interest in the stock. If you have open interest rising and the volume rising, then this likely means that the traders believe the stock will fall. And then if you have open interest falling and the volume falling, then both of these mean that traders are probably slightly positive on the direction of the stock to the upside, but it also may mean that it's in a consolidation zone. There may be less interest in the stock, which then would result in less volume. Okay, so this, if you don't want to go through all that, because there's a lot of analysis involved with that. If you just want to know, okay, what's the overall sentiment of the stock? You can go into Thinkorswim and they provide you the put call ratio in the trade window. We'll go look at that. This is again based on the total volume of all puts and all calls for a stock. And again, what this means is if the OI, PC ROI is less than 1, it's a bullish view. If it's less than 0.7, it's very bullish. If it's greater than 1, it's bearish. If the value is 1, then it's neutral. Okay, so this is something I wanted to talk about in combining shorting, the put call stuff, but I know that was a huge amount of information. I don't know, does anyone have any questions, or do you want me to review anything? You want me to go to Thinkorswim first? Let me know what you would like.
Can you review the first page again?
Mm-hmm. This one?
Yes, please.
Okay, so let me do this. These are just definitions. Can you still see that?
Yeah.
Okay.
So
What I was going to do is
yeah.
I thought it might be useful if we look at a real example.
You're
So
right.
Mayor, we're looking at your slide right now. Are you showing a chart?
No.
What I'm going to do is show the trade window.
Okay, we can't see your,
No, I know. I'm
Okay.
not set up there yet. Okay.
The option thing is what has me confused, because you're saying it's a chunk of 100.
Yeah.
No, the contract is a chunk of 100.
Yeah. And
so
what I mean, I was just giving you definitions, and this is
Okay.
where it can get kind of wonky, a little bit too deep. So really one option is equal to 100 shares by definition of a stock. But so when you buy one contract, that is one option, and within that option, you're buying 100 shares of the stock at a much lower price than what you would buy if you were buying 100 shares of just the stock itself.
Oh, interesting. Okay.
Yeah, but like I was saying, options expire.
Yeah.
And so it requires a lot of knowledge And you could lose a lot of money if you don't know what you're doing with this, even though it looks like a great deal. It's not, unless you know what you're doing. And so we're not really trading, we're not trading options. We're just using the information on these options to help us understand what's going on potentially with the future of the stock itself, helps with the direction. So let me show you.
That's helpful. Thank you.
Oh, good. Let me just show you. Okay, you guys see this window? The
Yes,
trade window? Okay, so here we are. Let's just look at this real quickly. This is plug, and this is a weekly options chain. It's identified by this weekly. So this will only live for the next 5 days. These are like a week long and then they expire. Okay, and so what I was talking about, these are calls and these are puts over here. Okay, so then we're looking at the volume, and let's look at strike price 27 right here. Okay, so I started following plug at this price at 27. And it's looking at the volume was 1,295. So there was some activity. The open interest, this means that people are holding on to what they bought right here. Whatever transaction they did, they're holding on. They didn't, I don't want to say sell it, because you can do different things with options, but they're just holding on to what their investment. And so this is where we can take this value, let's see, we can take the volume over here of the put and divide it by the volume here of the call, and we can find out what the put call ratio is at strike 27. If it is less than, if it's like 0.1, like 212, that means it's very bullish. If investors are still interested in the stock, they think that something may happen around this price level. Because this is how you view this, is for our perspective, we're looking at this from the stock side. So let me show you. Go back down here to this slide. I'll share. May not be sharing the right one. Oh, this one. Okay, and you guys see it with the purple?
yes,
Okay. Okay, so what I did is that I started watching plug at strike price 27. Okay, and so I was wondering, okay, there seemed to be, here's our put call open interest right here. On that day, it was way up here, so it was high. And so that means that the investors were a little bit bearish on this stock. Okay, and so you can see that, right? It's red, and this is high. This is just an overlay. And so this is the volume. It was also high, relatively speaking. And so I was thinking, okay, well, will it find support at this level? And what I did, and we haven't, for some of you new folks, we haven't really gone into the Fibonacci levels, and we'll go into that in some more detail in the future. But what I did was I drew a fib from here to here. So the low here, the high here, and I got these levels, 38% and 50%. So the question was, is it going to hold? Well, it didn't. It fell. And so then, but I started watching the put call open interest, and it was dropping, which means that the investors were becoming actually more bullish on this, because remember, the put call, it's the higher it is, the more puts there are. Okay, so, and puts mean negative. Puts mean people see the stock as likely going down, or they're hoping it's going to go down. So as this falls, this is actually positive for us, and as we view where the stock might go, which we want the stock to go up. Okay, so I was really watching this, and so it just keeps going down. And so it hit this line, the 50% fib line, and it's right within my manual channel. I drew this channel, and it is now in this consolidation zone, as you can see. It's bouncing between these two levels. And so the question I have now is, because it looks like investors are a bit more positive in thinking that plug is going to climb above strike price 27, then this could break right here and continue up. And so the question is, will it, and when? I'm looking down here at my other indicators. The RSI right now is below the midline. It's not where you want it. You want it to cross above the midline. So I'm waiting for that. But right down here, the stochastics is way in the oversold zone. And it really doesn't have a lot more room to fall. And the MACD is really low as well. 1 second. So what I'm looking at is, well, tomorrow specifically, what it will do. I had the 10-day EMA, but it was just getting really crowded on here, trying to keep things a little cleaner. But if this can break above this line, and this guy starts to move, and this guy starts to move, then there's quite a bit of potential. But I'm seeing right here, the shorting is where I've got this. I want to share this with you guys. So you see in my spreadsheet?
Oh, yeah.
Okay, so what I did is I took the information, I had to plot this manually. I took it from Thinkorswim. So every day I logged the call volume, I logged the call open interest, the put volume, and the put open interest. And then I created formulas to calculate what these percentages are. So on the 7th and the 8th, really high, like greater than 1 is high. This is like in the 2s, that's super high. But it started to fall. Like I said, here we go, it's coming down. And then I was looking at this shorts also. And so I copied this from my spreadsheet, our spreadsheet, and I put it on the chart to see how it corresponds with the other indicators here. And the shorting has actually kind of flattened out, as you can see. And so this is another thing to look at. The last time we met, we talked about the short interest. If it was higher than 30%, and it continued to increase, which it did slightly, and the price continues to drop, which it did, and we saw that on our chart, and the stochastics is failing to form a new low, which it is right now, then this can indicate that a short squeeze is coming, meaning the shorts are going to start covering and they're going to have to buy back their positions so they don't lose money because the stock is going to go up. So you can use the shorting information. You can use this put call information, or yes, put call information, see what the trend is over time. And to give you a better, maybe a little better idea of what your stock might be doing in the future, in the near future. So back to chart. So with all that information, you know, I'm going to be really interested to see what happens if this doesn't bust up above this. Obviously, there's, you know, right before holidays, stocks don't do particularly well. And so that could have been a holiday right before holiday thing, or there was profit taking. So I am watching this tomorrow to see if it will clear this level, and potentially the next resistance would be the scripted channel here or the manual channel. So I know that's a ton of information, really rapid fire. So any questions?
I think it was great, Mayor. I mean, it was really good presentation. It's good information.
Yeah, I know, but
There is a lot there.
yes, there is a lot there, and I'm always available to answer questions. I mean, believe me, this stuff, I know this is advanced. Okay, I want to put out there, this is the shorting, the put call stuff, this is advanced stuff. And so, you know, just take it one step at a time. And I think that by doing so, you guys will see how this can actually come together and create a pretty cool picture, because this is, the whole put call thing is more like a forecasting kind of indicator. It's one of the few that we have, it's not lagging. And so by monitoring, you can monitor it at a specific price, or you can look at just the stock itself in general. I mean, and on the trade window and look to see what the put call ratio is. You know, anything less than 0.7 is okay, is good. That means that there's a less bearish view, and that's what you want to look for.